Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Steven Ehrlich, director of research of digital assets of Forbes Crypto, to discuss if Contagion could spread to other stablecoins following the collapse of LUNA and UST, or if the bottom is potentially in. Steven, it's been quite a couple of weeks in the space that you sit in. Where are we right now with the LUNA UST situation?
Yeah, and first of all, thanks, Jill, again for having me back. This really has been some of the most eventful days that I've experienced in crypto, and I've been in this industry for over 10 years at this point. The rise of LUNA UST was pretty dramatic, and the fall was even more staggering. As we sit right now, I think UST, the stable coin that's sort of underpinned by LUNA, is trading a little bit over 10 cents. LUNA, the token itself that was kind of used to help act as a cushion or shock absorber for UST, is worth less than like hundredths of a penny. It's virtually worthless at this point. So it really has been a shock to the system, and now people are really starting to wonder, so what's going to happen next? Are other stable coins in jeopardy? A lot of people are looking to Tether, which is a stable coin, the largest in the world by market capitalization, that operates slightly differently because it purports to back it up with more tangible assets like dollars, treasuries, short-term commercial debt, although they've been very notoriously opaque about the constitution of those reserves. And Tether itself lost its peg briefly on Wednesday, went down to, I think, about 95 cents before regaining it. But there's some concern there. And then obviously, the shock of this has permeated throughout the entire crypto industry. Bitcoin fell below $30,000 briefly. Ether fell below $2,000. They've both regained their pegs, but the market is still struggling to kind of come to grips with exactly what happened.
So what collateral damage has been done, and do you think Contagion is likely to spread?
Yeah, good question. So from a collateral damage point of view, obviously the market had already been going down because of more general macro factors, the war in Ukraine, another Fed rate increase, so on and so forth. But then obviously this was a special circumstance where the suddenness of the crash spooked a lot of people that were already a little bit nervous. And then the Luna Foundation Guard, which is sort of the entity that was assigned the mission to try to protect the peg, they had actually bought billions of dollars worth of Bitcoin as an additional form of collateral that was going to underpin the asset. And they actually tried to sell all of it and dump it onto the market as a way of protecting the asset earlier this week to no avail. So that led to a supply increase, more selling pressure on the asset, which brought things down further. And then the other big piece of this that hasn't really been mentioned yet is just Coinbase announced earnings on Wednesday too, and the earnings came in well under what analysts had expected. It was their first loss as a public company, and that really scared investors too, because Coinbase is very much seen as a bellwether for the entire industry as a whole. So with all that happening, people are nervous. That said, I do think we are close to the bottom. For one thing, the Luna Foundation Guard has sort of exhausted its reserves, so there's no more. They don't really have more assets to dump. Luna and UST themselves are basically at the bottom as well, so we don't really have much more to worry about at that point too. And then the one other thing that I think is important to note is that Luna UST, even though it's a stable coin and it's been used in DeFi, et cetera, it was a relatively self-contained ecosystem. Most of the UST that was in circulation, over 75% of it, was actually locked up in one lending protocol called Anchor that runs on the Luna blockchain. So it was relatively self-contained. And I think the best, not to take my word for it, but Janet Yellen, Treasury Secretary, this week when she was testifying in front of Congress, she even acknowledged the differences between how LUNA UST operates and the more traditional stablecoins that regulators have been focusing on. So yeah, I think even in Washington, they get that this may not necessarily be a contagion, but obviously people are still skittish.
Let's talk about that. What has been the response from regulators?
So, I mean, they really are trying to see exactly what happened. There's already been a pretty substantial focus on stablecoins because of sort of how they could come into direct competition with the US dollar and potentially a digital dollar. And now, but at the same time, most regulators have really just focused on the traditional like fiat-backed stablecoin, Tether or Circle Coin, USDC, USD coin, which is the second largest by market cap, about $50 billion. That's really backed by just dollars and treasuries, and they're trying to find the right way to regulate those types of things. And now all of a sudden they they're coming to the realization, some already knew it, but some are now starting to realize that not all stablecoins are created equal. And that doesn't necessarily just mean the constitution of their collateral, but also just how they were designed. And these algorithmic stablecoins, most people in the industry and would probably tell you, and I believe, I mean, they are a work of sophisticated financial engineering. I think they're designed to kind of be what Bitcoin was supposed to be, because it was first unveiled as a payment system, but they've proven to be relatively fragile, and no one's really been able to put one together that has proven to be resilient.
Well, I mean, Stephen, we also have to put it in a higher level context as well.
Mm-hmm.
This asset class is so young relative to the grand scheme of things. And with any technology, there are going to be bumps along the road. You know, I understand people have lost a lot of money, but they've also made a lot of money in the space as well.
Mm-hmm.
And I don't have the technical expertise to explain it as eloquently as you can, but there are going to be bumps in the road, and this is part of the community's way of working through these and hopefully learning from these experiences so that they can continue to build better platforms and come to, you know, more stable digitized assets. Yeah,
I would completely agree with that. I mean, a lot of people are going through perhaps a crypto winter or a bear market for the first time in their history. I mean, remember the last time we had a really big drop was in 2017, 2018. And that was really before a lot of the institutional money came in, a lot of the infrastructure was built. And most people that have invested in crypto have really only ever known charts going up and to the right. And this is a little bit different. I mean, crypto
and
is
the same can be said for equity.
Mm-hmm. Yeah,
investors
exactly.
As well. I mean, look at the influx of retail investors that came to the market, especially in the past 2 years. And this is the first time that they are going through this type of cycle as well. So it's just to say it's one specific asset class. I mean, it's everywhere right now because there's a lot of underlying fundamental issues throughout the world.
Absolutely. And if you look at like the FANG stocks, like the big tech stocks in particular, I mean, they're doing, I mean, up until perhaps this week, they were doing just as poorly as some crypto assets were. So, I mean, this is new territory. And one thing that's just important for investors to understand is to kind of stick to your principles, especially during times of uncertainty, and to be very careful when you take on excessive leverage or borrow assets to deepen your positions, because markets do correct at some point. They do sort of reverberate back or regress back to the mean, and that's kind of what we're experiencing right now. That said, I mean, just like in 2017, 2018, a lot of the big companies today got their start then during that crypto winter. And if that's what we're going to be experiencing now, in 2 to 3 years, look out for the next group of companies that are building the infrastructure and the rails for hopefully the next generation of the internet.
Well, what's that old saying in Wall Street? Stairs up, elevator down, right? It applies to multiple asset classes. One more question I want to get out before we wrap here. Because of all the institutional adoption, are you concerned about the correlative nature of Bitcoin to what's happening, let's say the Nasdaq 100, for example? Because it seems as if, and I've even heard it in financial media, that they are starting to make that correlation outright.
Yeah, it is. It's kind of funny. Everybody wants the money, the institutional money, to come in, and obviously that's helped turbocharge prices. But at the same point, then they analyze crypto like traditional financial institutions and advisors do. I mean, during the earlier crises where Bitcoin was pretty uncorrelated, no one really talks about that much anymore, but it was because most of the early adopters got in for ideological purposes. And I would imagine a lot of them had no other savings in anything other than Bitcoin. So they weren't really worried about this. But now, in sort of a risk-off, risk-averse climate, we are seeing institutions sort of retrench a little bit. I mean, one big signal of this is that the discounts on 2 major institutionally focused products hosted by Grayscale, their Bitcoin Trust and their Ethereum Trust, are both at all-time highs or lows as you see it. I mean, that's a great signal there. But at the same point, like, this is almost a learning process. In crypto, we almost kind of see it as a rite of passage that you're not really a Bitcoiner or sort of a cryptopian until you've seen 70 to 80% of your funds go down, and then you come back out the other side. So it's sort of an education for everybody, and everyone has to go through it at least once before they truly understand the nature of this asset class.
All right, Stephen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thanks, Joe.